check, check. Hello. Online students, can you hear my voice? Online student, hello, hello. Okay, good. Now, guys, we start with the new chapter. Excited? Thank God, all the big chapters are over now. Now in one day we will finish two chapters. This IFOS we are going to start today and we'll end tomorrow. Okay. Income from other sources. So now tell me, how many sources of income are there? The same question 5 times I have asked you, and every time you have told me the wrong answer. How many sources of income are there? 5 sources. Many sources. Many sources of income are there. All those sources of income we classify into 5 heads of income. Few sources of income will be classified under salary. Few will be classified under house property. Few will be classified under PGBP. Few sources of income will be classified under the head capital gains, and remaining of the sources will be classified under IFRS. Now, my first question to madam, you. Which source of income you will classify under salary head? Excellent. Sit down. Adarsh. Before sitting, please, come. Before sitting, you will just point out one person whom you would like to nominate. I want to ask question from someone. Or nominate someone. Come on. Vidhan Sabha, no? Government employees. Hey, what? Nominate a person. Come on, fast. Gokul, stand up. Gokul. See, if you are not able to answer, no, then you are supposed to nominate others. Okay, no? Okay. So tell me, which sources of income will you classify under the head capital gains? Which sources of income? I'll keep some water ready for you. Come and jump in this water. Very good. Excellent. No need to jump. Wow. Wonderful. Claps. Which capital assets, which sources of income classified under capital gains? Capital asset. Okay. So answer has been given. Madam, you. Which sources of income you will classify under the head PGBP? Which sources of income? Source of income. Source. Business or profession. Correct answer? Sit down. Very good. Now tell me, if I have a bank FD, from that bank FD I will earn some income, interest. So that interest is my income from a bank FD. Bank FD is a source of income, giving me what type of income? Interest. Now if I want to charge that interest, can I charge that interest under the head salary? Yes or no? Why not? What are you? Okay. Can I charge that interest under the head salary? Because that source of income cannot be classified under the head salary. Oh, so can I charge that interest under the head house property? Why? Because that source of income cannot be classified under the head house property. Can I charge that interest under the head capital gains? Why? Because that source of income, bank FD, cannot be classified under the head capital gain. Can I charge that under the head PGBP? That is not my business, no. That is not my profession, no. So, source of income is there, giving me income also. That income, if it cannot be taxed under any of the earlier 4 heads of income, then to charge all those incomes, this head is made. This is a dustbin. This head is a dustbin. So whatever incomes which cannot be classified under any of the earlier 4 heads of income, all those incomes will come under this head. The name of this head is income from other sources, all other sources. Employer-employee relationship, salary. House property of which you are the owner, not using for the purpose of business or profession, house property. Business or profession, PGBP. Capital asset, all other sources will be classified under this head, IFOS. Income from all other sources. Yes or no? Now, which incomes will be classified under the head IFOS? First section, charging section. Charging section will tell you that which incomes you are going to bring under the head IFOS. Section number 56, which will tell you basis of charge. Any head, first section will always tell you charging section. Charge of which income will fall under this head. Yes or no? Now, once the income is charged under this head, out of that income, you will get some reductions. You will be allowed to reduce some amounts, and that is known as deductions. So which all things you can take as a deduction out of the incomes which are taxed under the head IFOS. So the deductions are given under section 57. Yes or no? Now there are certain things which you cannot claim as a deduction. If you come, we will not allow it as a deduction. We will disallow. So known as disallowances. That is given in section number 58. And there are certain receipts which we will consider. There are certain receipts, there are certain benefits which we will consider as deemed incomes under the head IFOS, given in section 59. And there is one section 145 which I have already discussed along with PGBP head, if you remember, method of accounting. So 2 heads, PGBP head as well as IFOS head. Income needs to be calculated on the basis of method of accounting regularly followed. If the method of accounting followed is mercantile basis, then all the incomes of this year, whether received or receivable, will be taxable in this year. If all the expenses of this year, whether paid or payable, will be allowed as a deduction in this year. Method of accounting is mercantile system. So PGBP as well as IFOS will also be calculated on mercantile system of accounting. Yes or no? What if the method of accounting regularly followed to maintain your books is cash basis? Then PGBP as well as IFOS will be calculated on what basis? Cash basis. All the incomes received in this year will be taxable in this year, whether the income relates to this year or any other year. But since that income is received in this year, will be taxable in this year. All the expenses which are paid in this year, whether the expense relates to this year or any other year, if the payment of that expense has been made in this year, will be allowed as a deduction in this year, no matter to which year that expense relates. Understanding or not? So your incomes received in this year minus expenses actually paid in this year will give you the taxable income, which you have calculated on what basis? Cash basis. If you follow cash system of accounting on a regular basis. Yes or no? So your PGBP income as well as your IFOS income, the income of these 2 heads will be calculated based on method of accounting, which I have already told you as per section 145. But there are 3 exceptions. How many exceptions? These 3 incomes under the head IFOS will not be taxable based on method of accounting. Based on method of whatever method of accounting you are following, follow that method of accounting for all other incomes. Mercantile basis for all incomes. Cash basis for all incomes. Yes or no? But the 3 incomes are exceptions. Are number 1, dividend income. Chargeability of dividend will not be as per method of accounting. Chargeability of dividend will be as per section 8. Don't write. It is there in the notes. Don't worry. Chargeability of dividend will be as per method of accounting. No. Chargeability of dividend will be as per section 8. So in which year the dividend will be taxable? How the dividend will be charged? That is given in section number 8. You have to follow section number 8 for the chargeability of dividend. For dividends taxability, you cannot follow method of accounting. Yes or no? Second income, interest. Which income? Interest on compensation or enhanced compensation which you are going to receive for compulsory acquisition of your capital asset. So sometimes your capital asset is compulsorily acquired. Yes or no? So on compulsory acquisition of your capital asset, do you receive compensation? Yes. Do you receive enhanced compensation? Yes. So that compensation or enhanced compensation is taxed under the head capital gain. But along with that compensation, you get interest also. Because usually the authorities will delay in making the payment of that compensation or enhanced compensation. So usually in all those cases you get what? Interest. And that interest is your income taxable under the head IFRS. Always on receipt basis. Always on. No matter whatever method of accounting you are following. We don't care. Interest will be taxable. Interest on compensation. Interest on enhanced compensation on compulsory acquisition of a capital asset under any law. That interest will always be taxable under the IFRS based on receipt basis. Method of accounting irrelevant. Yes or no? And third income. Advance money received and forfeited. On or after 1st April 2014 is taxable under the head IFRS only on receipt basis. Only on. No matter whatever accounting, method of accounting you are following, will not give any importance to that. Receipt basis, on that receipt basis only, this income will be taxable. So three income you have to keep in mind. Number one, dividend income. Number two, interest. Interest on compensation. Interest on enhanced compensation. And number three, advance money received and forfeited. These three incomes, forget about method of accounting. Last two incomes will be taxable on receipt basis and dividend income will be taxable as per section 8. Understanding? All other incomes of IFRS said. All other incomes of follow method of accounting. Follow. If the method of accounting is mercantile basis, then the incomes will be taxable on mercantile basis. This year's income will be taxable in this year, whether received or receivable. Yes or no? If the method of accounting followed is cash basis, then whatever income of IFRS said received in this year will be taxable in this year. Whether that income relates to this year or any other year will not make any difference. Will you remember this? Sure, sir. Read. Section 145. Income under the head IFRS to be computed on the basis of method of accounting regularly followed by the income under the head IFRS to be computed in accordance with the cash or mercantile system of accounting regularly employed by the assessee to maintain his books of accounts. Yes or no? However, method of accounting is not relevant for the purpose of chargeability of the following three incomes. Number 1, 2 and 3. Number 1, dividend income. The taxability of dividend will be as per section 8. Number 2, interest on compensation or enhanced compensation on compulsory acquisition of a capital asset under any law. The compensation or enhanced compensation will be taxable under the head capital gains. But the interest on that compensation or enhanced compensation will come under the head IFRS and will be taxable only on receipt basis. You are not supposed to see that for which year you are given the interest. Interest can be given for last 3 years. So all the interest which you are receiving in this year will be taxable in this year. No matter to which year that interest relates. It will be always taxable on what basis? Receipt basis. Yes or no? Next one. Any sum received as advance money or otherwise in the course of negotiations for transfer of a capital asset and forfeited as the negotiation did not result into actual transfer of such capital asset, advance money received and forfeited will be taxable only on. But if it is received on or after 1st April 2014, because if it was received prior to 1st April 2014, that is adjusted under section 51 under the head capital gains. Yes or no? Will you remember this thing? Section 145 done? Now see. How many sections we are supposed to do? Only 4 sections are there. Only 56, 57, 58 and 59. 56 will tell you about 56. After reading section 56, after learning section 56, you will be in a position to classify the incomes under the head IFRS. You will come to know that which incomes are going to be taxed under the head IFRS. Okay. Now from those incomes which you will charge under the head IFRS, what are the deductions available? How those deductions will be allowed? That is given in section 57. Now, while calculating the income under the head IFRS, you are going to take certain items as a deduction. But no, we don't want to allow those items as a deduction. So those items we will disallow. Given in section 58. And there is a concept of deemed income under section 59. Yes or no? Now, what I'll tell you, 1, 2 and 3. Oh, sorry, huh? Do you know PGBP head? Do you know the deductions available under PGBP head? Copy paste under the head IFRS. So all the expenses, all the items which you can claim as a deduction out of your PGBP income under the PGBP head. If those items or those expenses are incurred to earn your IFRS income, those can be claimed as a deduction under the head IFRS. Section 57 done. OMG. Huh? All the disallowances under the head PGBP. The items which we disallow while calculating the income under the head PGBP. Do you remember? Amount paid in excess of 10,000 in a day to a person other than prescribed modes, not allowed as a copy paste. Expenses paid, payment for expenses, TDS was supposed to be deducted, but no TDS deducted. Oh, TDS deducted, but not deposited on or before the due date of filing ROI. Yes or no? 100% of that expense will be disallowed if the payment was supposed to be made to non-residents outside India or to a foreign company. Yes or no? Or if that payment was made to a resident, 30% is disallowed. Do you remember all those disallowances? If you are making the payment for any expense to your related party, that payment should be reasonable amount. Any payment over and above that reasonable amount will be disallowed. Copy paste the disallowances which are applicable, the items which are disallowed under the head PGBP while computing the taxable income under the head PGBP. Same type of disallowances will be attracted while computing your income under the head IFRS also. 58 done. And 59. 59 deemed incomes. That you also know. Do you know deemed PGBP income? So in deemed PGBP income, what did I say? Any expense, any loss, any trading liability for which you got the deduction under PGBP head. Against that loss, against that expense, against that trading liability, some recovery is done, some benefit is received later on. That recovery, that benefit will be deemed to be your PGBP income. Do you remember that? Under section 41. But now there is possibility that expense, loss, trading liability was allowed as a deduction under other provisions of the Income Tax Act other than PGBP. And for those expenses, for those liabilities, for those losses, if you are recovering any benefit or you are recovering any amount, that recovery, that benefit will now be taxable as your deemed income under the head IFRS, because the expense, loss or liability was not allowed under the head PGBP, it was allowed under other provisions. Yes or no? Now against that, if you are getting any recovery or benefit, that recovery or benefit will be taxable as your income under the head IFRS. Deemed income under the head IFRS. 59 done. 57 done, 58 done, 59 done. Only one section. Chapter will be over. So in this entire chapter, your full focus should be on incomes, which you can classify under the head IFRS. Now to earn these incomes, whatever related expenses you are incurring, those will be allowed as a deduction as you claim under the head PGBP. But only the section number reference will change. Now, instead of saying that the deduction is allowed under section 30, deduction is allowed under section 31, deduction is allowed under section 37.1, you will say deduction is allowed under section 57. Because these expenses are incurred to earn your IFOS income. So these expenses will be allowed as a deduction under the head IFOS from your IFOS income under section 57. That's it. There are certain disallowances, okay, there are certain items which you cannot claim as a deduction. You know that this item should not be allowed as a deduction while calculating your PGBP income. If something like that happens for IFOS income also, then don't claim it as a deduction and say this is disallowed as per section 58. That's it. If the payment is made to a resident and that payment was, on that payment you did not deduct TDS. So 30% of that payment will be disallowed as per which section? 58. Under the head IFOS, if you will speak about disallowance, which section you will quote? 58. If you will talk about deduction, which section you will quote? 57. Yes or no? Now tell me, which incomes will be taxable under the head IFOS? You have to focus on this part only. Yes or no? So basis of charge, charging section. So your charging section is divided into two parts. Divided into number one, that is given in 56.1. Number 2, that is given in 56. It's just like this. Two type of charge was there in PGBP also. General charge, specific charge. Do you remember something? General charge used to say that profit or gain arising from any business or profession carried on by the assessee at any time during the previous year. Generally that profit or gain will be taxable under the head PGBP. There were certain specific item of incomes. Those incomes will also be taxable under the head PGBP. Do you remember that? Compensation on termination, modification of managing agent agreement, agency contract, vesting of property to the government. Yes or no? Any business contract, those compensation will be taxable under the head PGBP. Export incentives will be taxable under the head PGBP. Perquisites in the course of business or profession taxable under the head PGBP. Those specific items of incomes, specific type of receipts will be taxable only under the head PGBP. Those receipts, those incomes you cannot classify under any other head, because those receipts, those incomes are to be treated as your business income. Yes or no? Just like that in capital gain also. We saw two type of charge. One, general charge. Two, specific charge. General charge 45.1. Profit or gain arising on transfer of a capital asset will be taxable as income under the head capital gain in the year in which the transfer of capital asset takes place. Yes or no? But there was some specific charge, special type of profit or gain in special situations. Even those profits or gains will also be treated as your income only under the head capital gain. Specific charge 45.1a, profit or gain arising on receipt of insurance claim on damage or destruction of your capital asset will be treated as your income only under the head capital gain. This income, this profit or gain cannot be classified under any other head except capital gain. Will go to capital gain only. Yes or no? Then any profit or gain arising on conversion of capital asset into stock in trade, that profit or gain will be taxable only under the head capital gain. Profit or gain arising on compulsory acquisition of a capital asset under any law, that profit or gain will be specifically taxable as income under the head capital gain only. That specific charge, meaning specific type of incomes, which cannot go to any other head except for that head. Yes or no? So just like that, there are two types of charge under the head IFOS also. General charge, specific charge. Generally, which incomes are taxable under the head IFOS? 56.1. And under section 56.2, list is given. List of incomes. If you see any of these incomes, compulsory these incomes will be taxable as your IFOS income only. Yes or no? So generally which income will be taxable? Any income which is not exempt. So you'll have to check the exemption section, section 10. So the income should not be exempt. Income should be a taxable income. Income should not be an exempt income. Income should be a taxable income. And if that income is not taxable under any of the earlier 4 heads of income, most welcome. That taxable income, that source of income will fall under the head IFOS, and the income will be taxable under the head IFOS. General charge. Over. That is why I said this is a dustbin. Whatever you cannot classify under earlier 4 heads, dustbin is there. Put that income in this dustbin. You have to ask the income. You have to ask, income, are you exempt? Oh, not exempt. Oh, so means you are a taxable income. So try to go to salary. No. Try to go to house property. No. Try to go to PGBP. No. Try to go to capital gain. No, you are not going anywhere. No problem. Come here. IFOS. Understanding? So this is general charge. Income came to IFOS side. Because of which section you are coming here? General charge. The income will tell you. Understanding? But there are certain special types of incomes. List is given. If you see any of these incomes, close your eyes and tell that, hello, you are going to go to IFOS only. No other head will take you. This is the only head which can accept you as taxable here. These incomes cannot be taxed under any other head except IFOS. Yes or no? So list of those incomes. So what we are going to see? We are going to see specific charge income one by one. And in between few incomes we will see that these are similar type of incomes, but these incomes are not taxable because of specific charge. These incomes are taxable because of general charge. One by one, all the incomes are done. Section 56 is done. 56 is done. Chapter is done. Understanding? Hello? So we start from which charge? Specific charge. We'll complete all the incomes of specific charge. But while discussing those incomes, some similar type of income can also be there, which is not taxable under the head IFOS as per specific charge, but which is still taxable under the head IFOS because of general charge. We'll see those incomes also along with that. And in the end, I will give you the list of few incomes which you have to keep in mind, because these incomes are also taxable under the head IFOS because of general charge. And many of those incomes you know also. Board meeting fees, sitting fees received by a director who is not the employee of the company. IFOS. Salary received by MP, MLA, MLC. Taxable under the head IFOS. Agriculture income from a land situated outside India. Because the land situated in India, agriculture income will be exempt. But if the land is situated outside India, from that, if any agriculture income is there, IFOS. Yes or no? A lecturer, college lecturer is receiving what? Remuneration, paper setting fees, paper checking fees from university. University is not the employer. So any remuneration which you are going to get from non-employer, taxable under the head IFOS. There are many incomes. If you have a building, you are not the owner of that building. You are the tenant of that building. But if you sublet that building and you are receiving the rent from subletting that building, that rent cannot go to house property. That rent will come to IFOS. There are many incomes which you already know. Yes or no? So in the end, I have created a list of all those incomes which are taxable under the head IFOS, but not because of specific charge, because of general charge. And these incomes are repeatedly asked in the exam. So you have to be careful that you classify all these incomes under the head IFOS only. Yes or no? But these are not the only incomes which will be taxable under the IFOS. This is just a illustrative list. Examples. Other than this, many other incomes can also come under the head IFOS. Understanding? So first you are going to focus on which incomes? Incomes which are specifically taxable under the head IFOS. You cannot take these incomes to any other head. So the first income which you are going to learn, 56 subsection 2 clause 1. In the 56 subsection 2 specific charge, there is one clause, clause number 1, first income, which will be taxable under the head IFOS, only IFOS, no other head. Yes or no? Is dividend income. Which income? Dividend income. Then You will go to 1B. You will get winnings income. Which income? Winnings income. Then you will go to 1C. 1C. You will get amount deducted from salary of employee as what? As employee's contribution to staff welfare funds or schemes. So you are deducting some amount out of the salary of your employee. As your employee's contribution, you are deducting that amount and keeping that amount with yourself. That amount is your income. If you have deducted that amount in the course of your business or profession, that will be your income under the head PGBP. But what if you are not doing any business or profession? You have not deducted that amount in the course of your business or profession. Then that income will fall under the head IFOS. Deposit that amount in the scheme, deposit that amount in the fund on or before the statutory due date of that fund, and you take the deduction under the head PGBP. And if that amount was taxed under the head IFOS, you take that deduction under the head IFOS. Getting my point? So, this is 1C. Then clause 2 will come. Sorry, 1D will come. 1D. 1D talks about interests. Interest on securities. Which incomes are? Interest on securities. See, if not taxable under the head PGBP, then this income will come under the head IFOS. This is also, if not taxable under the head PGBP, then only this income will also come. So interest on securities, first try to classify under the head PGBP. If the interest is not taxable under the head PGBP, then the interest on securities will come under the head IFOS only. It cannot go to any other head. Yes or no? Then after clause 1D, there will be clause 2, which talk about rent. Rent. Which rent? Composite rent. Rent from letting out any furniture or plant and machinery. So you are letting out furniture or you are letting out plant and machinery. So by letting out this asset, whatever rent you are receiving, that rent will also be taxable as your income under the head IFOS. But this will happen only if it is not taxable under the head PGBP. Yes or no? Now clause number 3 is there. Which clause? Clause number 3 is there. As per clause number 3. As per clause number 3. Composite rent. Which rent? Composite rent from letting out building along with furniture or plant and machinery, and where such letting is what? Inseparable. Inseparable letting, separable letting, composite rent, I have already discussed under the head house property. While discussing the house property chapter, I have discussed. Out of these now, many incomes I have already told you earlier. Now I will tell you few important points to remember while charging these incomes under the head IFOS. Keep these things in mind while charging this income under the head IFOS. Yes or no? Remember those things. The chapter is done. Understanding or not? But this income will be taxable under the head IFOS only if it is not taxable under the head PGBP. Clause 3 is there. Then after clause 3, you will go to clause number 4. Clause number 4, any sum including bonus if any, including bonus if any, which is received under a keyman insurance policy. Which policy? And that keyman insurance policy was there in salary head also, profit in lieu of salary. This was there in the PGBP also, specific charge. This income will be taxable as your PGBP income also. So if this amount cannot be taxed under the head PGBP, if this amount cannot be taxed under the head salary, then my dear friends, welcome, this amount will be taxable as your IFRS income. Specific charge is there, yes or no? So this amount will be taxable as your IFRS income if not taxable under the head income from salary or PGBP. Then this will be taxable under the head IFRS. Clause number 5 is not there, omitted. Clause number 6 is not there, omitted. 7 is not there, omitted. 7A not there, omitted. 7B not there, omitted. Then you will come to clause number 8. Which clause? 8. Interest. Interesting. Interest on compensation or enhanced compensation which you receive on compulsory acquisition of capital asset under any law. So if your capital asset is compulsorily acquired under any law, compensation or enhanced compensation will go to capital gain. But interest on that will come under the head IFRS as per specific charge. Clause number 8. Yes or no? Then after clause number 8, you will get clause number 9. Advance money received and forfeited. Yes or no? In the course of negotiations for a transfer of a capital asset, but the negotiations did not result into actual transfer is not made, and you have received consideration in advance, in token, yes or no, and which you have forfeited. You have cancelled the sale agreement and you have forfeited that advance on or after 1st April 2014. This advance money will also be taxable under the head IFRS. Very difficult. Clause number 10. Gift. Gift of asset. Some gift in cash, gift in kind, with consideration, without consideration, all the gifts. Total 5 situations are there. How many situations? In 5 situations, whatever is received in these 5 situations will be treated as your gift. Now along with this gift, we are also going to cover section 49(4), which I left in capital gain head. I remember. And I will connect capital gains along with gift provisions. Because a combined question can come. In that question, one transaction they will give, one transaction in the hands of transferor, calculate the capital gain, and in the hands of recipient, transferee, whether the gift provisions will be applicable or not, gift will be taxable for him under the head IFRS or not. Understanding? And with that, we'll mix 49(4) and I will confuse you with 49(1) also. Do you remember? Any asset received by way of mode specified under section 49(1). Gift is a mode specified under section 49(1). So cost to previous owner is taken as cost. Here that cost will not come. 49(4) will come. How is that possible? Yes or no? So all those things I am going to discuss with clause number 10. Then after clause number 10, there is one clause number 11. Clause number 11. That clause says that any compensation or other payment received or receivable on termination or modification of employment contract. Sir, if employment contract is terminated, modified, and for that compensation is received, that will be profit in lieu of salary, taxable under the head salary. If cannot be taxed under the head salary, then it will come under the head IFOS. When that will happen, we are going to discuss. Yes or no? And the last clause, clause number 12. Any sum received under a life insurance policy. Life insurance policy, sum received which is not exempt under section 1010D. That sum which is not exempt under 1010D will also be treated as your IFOS income. Now these incomes, these specific type of incomes, list I have already written, yes or no? Now one by one, each and every income we are going to discuss in detail. What incomes, what points you are supposed to keep in your mind. See, in this much depth, no, in which we are going to do this chapter, in this much depth nobody will do. But I am going to teach you this chapter in such a way that if anything is asked from this chapter, no, you are able to answer them properly. Because this chapter, students usually don't give importance. Usually everywhere, entire India, the faculties will be teaching, no, what they will be saying? IFOS said, no, very easy and not that important. No need to focus. But according to me, this head is very, very, very important. Why? Because this head, income of this head can be clubbed with any question. These incomes can be asked along with any question. If anything out of these is given as a part of your main questions and you don't read all these things in detail, then whatever marks which you are going to score in that question, no, you will not be able to score full marks because you are unaware about these things. So at the time of taxability, there are certain important things which you are supposed to keep in mind. I'm not just supposed to tell you that, okay, these are the incomes which are taxable under the head IFRS. I can say this and I can go also. But while charging these incomes under the head IFRS, what are the important things which you should keep in mind? The things where they can put you in real trouble, that they will confuse you. They will give you this income and they will give you this information also. So, whether this income will be still taxable under the head IFOS or it will become exempt. Whether this income will be still taxable under the head IFOS or it will go to any other head. Whether this income will be still taxable under the head IFOS. Then if yes, then how much amount will be taxable? Yes or no? All those important things you are supposed to keep in mind. So one by one we are going to discuss these incomes in detail. Yes or no? But while discussing these incomes now, we will discuss those incomes also which are similar type of incomes. For example, can you see this rental income? Can you see this rental income? And can you see this rental income? So these two rents are specifically taxable under the head IFOS because of specific charge. But other rents can also be taxable under the head IFOS, not because of specific charge, because of general charge. So when I will be discussing these two rents, along with these two rents, I will cover those rents also. Yes or no? Can you see interest over here? This interest, then this interest. These two specific type of interest will be taxable under the head IFOS because of specific charge. But there are other interest also which you will tax under the head IFOS. Not because of specific charge, because of general charge. But wait, there are certain interest which will not be taxable only. Neither under the head IFOS nor under any other heads. Why? Because those interests are exempt only. So I will tell you about those incomes also which are similar type of income which are exempt. So no need to charge them under the head IFOS, no need to charge them under other heads also. Because those incomes are appearing to be similar type of incomes, but don't charge them under the head IFOS. They will be exempt. So this way we'll consolidate everything. Okay. And once we are the discussion about the last income will be done, no, this chapter will be over. Because section 57, 58 and 59, only 5 minutes discussion is there, which I have already done, which I will again tell you, so that you don't feel that after 56 sir did not do 57, 58 and 59. I will again do the same discussion with you. Then once we are through with 56, 57, 58, 59, the chapter is over. Yes or no? Huh? Okay. So, first income. Which income? Shall we start with dividend? Tell me the section number. 56. Subsection 2. Clause 1. First income is dividend. Now see, you can see very simply that they are saying if you see dividend income, charge under the head. Simple, no? Anything else? Extra information given? Simple. Dividend you see, you charge that dividend under which head? Dividend will not go to any other head. Dividend will always come to IFOS head. Yes or no? Tell me. Now see, they will try to confuse you. This is dividend on equity shares. They will give you in the question, dividend income we know na, that dividend is taxable under which head? IFOS. So they will not give you straight away. They will say, assessee is holding 1000 equity shares of this company. Per share, 5 rupees dividend he is getting. So the dividend, 5 rupees into 1000 shares. 5,000 rupees dividend, but this dividend is on equity shares. Confused. Now dividend was on equity share. No, sir had said dividend on preference shares. You will be confused, no? No need to get confused. Whether the dividend is on equity shares or the dividend is on preference shares, it will not make any difference. It will come under the head IFOS. Now they will deliberately give you dividend on shares of listed company. So what? Even if the company is unlisted, they have not told you, no, the dividend from the shares of listed company will only be taxable. So even the shares are unlisted, on the shares of unlisted company also the dividend can come, will be taxable under the head IFOS. Wait. Dividend on the shares of company only, no? Dividend on shares of a company only will be taxable here. No, dividend on the shares of cooperative society will also be taxable here. Because sometimes the cooperative societies also issue what? Shares. And on the shares of cooperative society also sometimes you will get dividend. Where that dividend will go? IFOS. Whenever you see dividend income, you are supposed to bring that dividend income under the head IFOS. Sir, dividend was final dividend declared in AGM, IFOS. Dividend was interim dividend declared in board meeting, IFOS. But there are certain items which are not usually treated as dividend in account, but under the IFOS head, they are treated as deemed dividends. So if you see any of those receipts, which are covered by the definition of deemed dividend, those receipts are also treated as your dividend and they will also be taxable under the head IFOS. So now tell me, dividend on what? On shares. Shares of cooperative society can be there? Yes or no? Shares of company can also be there. Company can be listed, unlisted, Indian, foreign. Will it make any difference? Any type of company. Okay. Indian, foreign, Then public limited, private limited, yes or no? Public or private? I will write PUB public or PVT private. Any type of company is there. Shares of company or shares of a cooperative society. Any type of shares, yes or no? Whether the shares are equity or shares are preference, will it make any difference? No. So shares can be equity shares, shares can be preference shares, shares can be of any cooperative society, shares can be of any company. Whether the company is a listed company, unlisted company, yes or no? Company is a private limited company, public limited company, shares can be of Indian company, shares can be of foreign company, yes or no? But remember, shares of which company? Where is the company situated? So where the shares are situated? Outside India. On those shares, if you are going to get dividend, so can I say dividend is accrued outside India? But if you receive that dividend in, it becomes your Indian income. Whether you are ROR, RNOR or NR, it will always be taxable in India. But what if that dividend is received outside India only? Accrued outside India, received outside India, foreign income, A or B, B, tick, cross, cross, taxable only if you are ROR. So whether you are ROR or RNOR or NR, if the dividend from foreign company is received in India, it will become your Indian income. Always taxable under the head IFRS. Yes or no? But what if that dividend is received outside India only? Then it becomes your foreign income. Will be taxable for you under the head IFRS only if your status is ROR. Not taxable for you if you are RNOR or NR. But you are going to charge that dividend under the head IFRS only. Understanding or not? Sure. Now tell me, how many types of dividend you can have? How many types of dividend you can have? Usually you have two types of dividend, no? Sir, usually you have two types of dividend. One is final dividend. Second one is interim dividend. Yes or no? But there is one more type of dividend under the Income Tax Act. So under the Income Tax Act, the meaning of the term dividend is not only final dividend as well as interim dividend. Some other receipts from the company to the shareholder. Some specific type of receipts from the company to the shareholders will also be deemed to be dividend. So they are known as deemed dividends, which are given in section 2, subsection 22, clause A to clause F. And clause F has been inserted last year. Buyback price received by a shareholder from a domestic company will now be treated as your deemed dividend. Do you remember section 46? So that buyback price is also your deemed dividend. Before that, 5 more clauses are there. 222A, B, C, D, E. As per these clauses, which receipts are treated as your dividend, deemed dividend? Those things we are going to discuss. Yes or no? So tell me, which dividend can you receive? Final dividend? Yes or no? Can you receive interim dividend? Can you receive deemed dividend? Sir, final dividend taxable under the head IFRS. Interim dividend taxable under the head IFRS. Deemed dividend taxable under the head IFRS. Deemed dividend given in section 222, clause A to clause F. 6 clauses are there. In these 6 clauses, specific type of receipts. 6 type of receipts. In the accounting, in the accounting language, in the books of accounts, they are not treated as dividend. But for the income tax purpose, this type of receipt will also be treated as dividend in the hands of shareholder. Getting my point or not? So which are those receipts? We are going to see one by one. But first of all, tell me, dividend is your income, no? Hello, shareholder. Dividend is your income, no? So dividend is received on the shares, which you are holding as investment, meaning capital asset, or you are holding them as stock in trade. Will it make any difference? No. The dividend which is received on shares will always be taxable under the head IFOS. Whether the shares are held by you as capital asset, whether the shares are held by you as stock in trade, will not make any difference. So the shares can be held as investment also, shares can be held as stock in trade also. Please don't classify this dividend under PGBP. Sir, the shares were held as a stock in trade. No. So the shares which are held by me as a stock in trade, on those shares if I am getting dividend, I will give you 10 slaps if you will classify them under PGBP. That time also I have told you in the first lecture of PGBP that dividend on the shares which are held by you as a stock in trade cannot be classified under PGBP as your PGBP income, because there is a specific charge under the head IFOS which says that the dividend will always be taxable under the head whether the shares are held by you as a stock in trade or a capital asset will not make any difference. Sir, shares are held by me as a capital asset. If I sell those shares, then capital gain. Shares are held by me as a stock in trade. If I sell those shares, then PGBP. But till the time you are holding those shares, dividend you are receiving in the capacity of a shareholder will always be taxable under the head IFOS. Will you remember all these things? So while charging the dividend, no bloody, you have to keep all these things in your mind, and only then you can charge the dividend under the head IFOS. Will you remember this? So now tell me, dividend on what? Dividend on? Sir, dividend on shares. Shares can be equity shares, shares can be preference shares. Shares can be of any cooperative society, shares can be of any company, whether listed, unlisted, Indian, foreign, public, private limited, will not make any difference. Any type of shares of company, any type of shares of a cooperative society, on those shares, whatever dividend, whenever will come, will be always classified under the head IFOS. The shares can be held as investment also, capital asset also, shares can be held as stock in trade also, will not make any difference. On shares, whenever you are going to get the dividend, will be always taxable under the head IFOS. The dividend can be final dividend, will be taxable under the head IFOS. Dividend can be interim dividend, will be taxable under the head IFOS. And the dividend can be deemed dividend also, will be taxable under the head IFOS. But sir, final dividend will be taxable in which year? Interim dividend will be taxable in which year? And deemed dividend will be taxable in which year? Follow method of accounting. Follow? If you do that, it is a suicide. In the starting of the chapter only I have told you, don't follow method of accounting. In which year the dividend will be treated as your income, that is already given in section number 8. Section number 8 will tell you that dividend will be treated as your income for which previous year. Dividend will be charged as your income under the head IFOS in which previous year. So how many types of dividend you can receive? Final dividend you can receive, interim dividend, and then what is final dividend? Come on, tell me. The dividend which is declared in AGM by the shareholders. After declaration, it cannot be cancelled. The company has to give that dividend within 30 days of AGM. That is known as final dividend. So dividend which is declared in AGM, dividend which is declared in final dividend. After declaration, will it be cancelled or compulsory the company will have to give? Within 30 days of AGM. So once the dividend is declared, can it be cancelled? So consider that dividend as the income of the year in which it is declared. Because the moment it is declared, it is your income. Now, hook or crook, we are going to get that income. Yes or no? So, what if the dividend is declared in this year? Final dividend is declared in this year and paid in this year. So, it will be taxable in this year. Why? Because it is declared in this year. So final dividend is taxable on what basis? Declaration. So taxable, final dividend is taxable in which previous year? In previous year in which it is declared. Because the moment it is declared, it is confirmed that you are going to get that dividend. Yes or no? What if the final dividend is declared in this year, but it is given to you next year? When it will be taxable? Sir, I am following cash system of accounting, so I don't treat any income as my income till the time I don't receive it. So since the dividend I have not received in this year, I am not going to show that dividend as my income for this year. Next year I am receiving, next year I will charge. The government will charge you. Bloody, was it a final dividend? Did we tell you that the final dividend will be taxable in the year of declaration? So we don't care what method of accounting you are following. Even if you are following cash system of accounting and you have not received that dividend in this year, still that dividend will be taxable as income in this year because it is declared in this year. Understanding? Section 8 will prevail over Section 145, method of accounting. Why, sir? Because Section 8 comes first. And before even you think about method of accounting, no, the dividends chargeability will happen as per Section 8. Understanding? Now interim dividend. What is interim dividend? AGM. Last AGM the dividend was declared. Now the next dividend will be declared in the next AGM, which is going to take a full year time. But what if the board of directors come to know that there are huge profits? So these profits should be distributed to the shareholders. And we don't want to wait till next AGM. So the board of directors in their board meeting may also declare a dividend between two AGM. In board meetings, the dividend which is declared is known as interim dividend. Now you know what is the beauty of interim dividend? Interim dividend once declared can be cancelled also. Board of directors will say, we are declaring this dividend. Oh, you declared interim dividend, taxable. You charge it on what basis? Declaration basis. Then later on, board of directors said, no, we were just kidding. We are cancelling the interim dividend. So bloody, if the interim dividend can be cancelled, then why are you charging it on declaration basis? Charge it on receipt basis, no. Charge it on in the year in which it is unconditionally made available to the shareholder, meaning received by the shareholder. No need to charge this dividend on the basis of declaration. Charge it on the basis of receipt. Charge it on the basis of. So interim dividend will be taxable. It will be taxable. Yes. Section 8 says that it will be taxable. But in which previous year it will be taxable? In the previous year in which it is received by the shareholder. And sir, deemed dividends under section 222A to 222F will be taxable in the previous year in which it is distributed or it is paid as the case may be. Because certain deemed dividend are distributions. Certain distributions will be treated as deemed dividend. And certain payments will be treated as deemed dividend. So sometimes a deemed dividend is a distribution. Sometimes a deemed dividend is a payment. So you charge the deemed dividend in the year of distribution, or you charge the deemed dividend in the year of payment, as the case may be. Understanding? This is section 8, which you have to compulsorily follow. If final dividend is there, will be taxable on what basis? Declaration basis. If interim dividend is there, will be taxable on what basis? Receipt basis. If deemed dividend is there, it will be taxable in the year in which it is either paid or distributed. Are you understanding what I am trying to tell you? Okay. So now tell me one thing. Dividend. Is it your income? Will it be taxable? Under which head? because of a specific charge. It will be taxable under the head IFOS. Now while charging the dividend, you have to keep all these things in mind. Will you? Sure. Now, I just have to tell you about this now. Which items are treated as deemed dividend? If you see any of these items, consider these items as your deemed dividends. Understanding or not? So now tell me one thing, simple thing. I'm going to tell you about those items. But before that, please remember one very, very, very important thing. Dividend income. Dividend income. This is your dividend income. Is it your IFOS income? It will be taxable under the head IFOS. So from this dividend income, no deduction for any expense shall be allowed. So from this dividend income, you cannot take any deduction of any expense other than, what did I say? Other than interest. Interest on loan. Loan which you have taken to invest. Invest in such shares on which you are getting this dividend income. So the shares on which you are getting dividend income, to buy those shares, to acquire those shares, you have taken a loan. And on that loan, if you are paying interest, then that interest we will allow, but we will not allow any other expense. Hello, sir. So when you will charge dividend under the head IFOS, when you will charge dividend under the head, full dividend will be taxable. Will you claim any deduction for any expense? No. No expense will be allowed as a deduction out of your dividend income. But one expense you can still claim. What is that one expense? Interest on loan. The loan which you have taken for, loan which you have taken to acquire, loan which you have taken to acquire such shares. The shares on which you are getting the dividend, to acquire such shares, you have taken a loan. And on that loan, if you are getting what? If you are paying interest, then that interest payment is your expense which we are going to allow. But, wait. This interest which will be allowed up to maximum 20% of such dividend income. So there is a limit of claiming the deduction of interest. For your example, interest, you have taken a loan. And by this loan, what are you doing? You are purchasing shares. Yes or no? And on those shares, you are getting what? Dividend. Example, dividend you received 2 lakh rupees. How much? So 2 lakh is your income. 20% of that, 40,000. 20% of your dividend income is 40,000. So interest on loan you can claim up to maximum 40,000. What if the interest on loan you have paid 32,000? Full interest will be allowed. Why? Because it is within the limit of 20%. Yes or no? But what if interest paid is 48,000? Only the interest to the extent of 40,000 can be claimed as a deduction. Excess 8,000 interest will not be allowed. It will be disallowed. Understanding? This is very important point, and students usually get stuck here. If it is asked in the exam, be very careful. Okay? They will give you the expenses related to dividend income. What are you going to do? Ignore all those expenses. Will not be allowed as a deduction. Because from dividend income, no deduction for expenses allowed. Hence, we are ignoring these expenses. Yes or no? But one expense is interest on loan taken to acquire these shares. Then that interest you can claim. Amount of interest was 35,000. Amount of interest was 35,000. Can you claim that entire 35,000? No, I will have to first check. I will have to first. How much was my dividend? Example 1 lakh. How much was the dividend? 1 lakh. 20% of 1 lakh? 20% of 1 lakh is not 40,000. It is 20% of. Now I have changed the example also. In the exam also you will get 2 lakh rupees of dividend. In the exam they are telling you that the dividend income is 80,000. Dividend income is? No sir, you told no, 2 lakh. So we took the limit of. Yesterday only I was calling you smart. But don't be this much smart. How much is the dividend income given in the question paper? 20% of that you are to take. In the class we are taking another example, no? So 80,000 into 20% will be maximum interest allowed is how much interest you have paid? In the question paper only it will be given, no? Right now in the class I am saying 35,000. No sir, it should be 35,000. No, you said in the question paper they are saying that the interest paid is 22,000. How much? How much was the limit? 16. And how much you have paid? 22. Will entire 22 will be allowed? Or only 16,000? Only 16,000. So out of your dividend income which was 80,000, you can take the deduction for interest which was 22,000, but entire 22,000 you cannot take. You can take up to 16,000. Maximum 16,000 limit is there. Yes or no? Hello? All the expenses given to earn that dividend income, yes or no? Ignore all of them because you are not going to get any deduction. Understood? Should I move ahead? Dividend income over. Now I just have to discuss what are deemed dividends. 222A to 222F. Out of that, F you already know. 222F you already know. 222C also you know. Distributions on liquidation. 222F, buyback price received by the shareholder from domestic company, which was to be considered as full value of consideration under section 46A to calculate your capital gain. That buyback price will not be taxable under capital gain, as full value of consideration will be treated as your deemed dividend as per 222F. So now one by one I am going to discuss deemed dividends with you. Yes or no? But that deemed dividend explanation will make logic if you understand one thing very clearly. Tell me, what is dividend? I want to see the knowledge of this commerce people. Ready? I cannot expect the answers of these things from a science background student, no? Or an arts background. You are a commerce background student, no? Full day you talk about companies, shares, finance, okay, no? So commerce background student, tell me what is dividend? Part of profits of the company. Very good, very good. Then distributed to the, that's it. You are absolutely correct. Dividend is nothing but part of profits of the company distributed to in cash. So when the profits of the company are distributed to the shareholder in cash in the form of final or interim dividend, yes or no? Then that is your income. But is it always necessary that the profits will be distributed in cash only? What if the profits are distributed in the form of asset? Deemed dividend. What if the profits are distributed in the form of liability? Increasing the liability. Deemed dividend. What if the profits are distributed at the time of liquidation? Deemed dividend. What if profits are first capitalized and then capital is distributed? Deemed dividend. What if no profits are distributed, loans are given, advances are given? Oh, you are trying to fool us. By not distributing profits, you are giving loans, advances to the shareholder. Deemed dividend. 5 cases. Can you distribute assets to the shareholder? Deemed dividend. Can you distribute? Can you increase your liability? Can you distribute debentures, etc.? Yes. Deemed dividend. Can you distribute cash assets? Can you distribute profits in the form of cash and assets at the time of liquidation? Deemed dividend. Can you convert your profits into capital, capitalize the profits, and can you distribute your capital? Yes. Deemed dividend. And even if you give loans or advances also to the shareholder, that will be deemed dividend. Understanding? 5 cases. Now, you might have done accounting, no? Tell me yes or no. What journal entries you usually pass for dividend? First of all, you will take out some amount out of your profits as dividend. That will be first entry. Then, for this profits which you have taken out as dividend, for this dividend you will give credit to the shareholder. Second entry. And third entry, the shareholder will be paid. So first entry, take out the dividend from your profits. First entry. Second entry, give the credit of this dividend to the shareholder. Yes or no? And third entry, pay the shareholder. So 3 entries are usually passed, and out of all these 3 entries, one net entry will come out. So first entry, when you will take out the dividend, from your profits, so P&L will be debited. P&L debit to dividend. Then give the credit of this dividend to the shareholder. Then dividend to shareholder. Then third entry, pay the shareholder. Shareholder to cash bank. Understanding? What is the first entry? Come on, tell me. P&L. P&L means reserves, no? Yes or no? Reserves account, debit. So whenever you debit the reserves, meaning reserves are getting down. Crediting the reserves mean reserves are increasing. Whenever you debit the reserves, reserves are going down. So reserves are going down, and where are you apportioning these reserves? For payment of dividend. So this much amount of reserves I am allocating for dividend. Understanding? So debit the P&L, debit the reserve to dividend account. Now this dividend will be interim dividend also. This dividend will be final dividend also. This can be any type of dividend, yes or no? So P&L account debit to final dividend. P&L account debit to interim dividend. Done, sir. Second entry. Now this dividend, shareholder should be given credit for this. So next entry will be dividend account debit to shareholders account. Yes or no? And now the shareholders will be paid this dividend in the form of cash. So shareholders account debit to cash or bank account. Yes or no? Now can you see dividend cancel. One credit against that debit. Shareholder. What is the net entry? P&L. That is reserves account debit to cash or bank account. So you rightly said dividend is what? Distribution of profits by a company to the shareholder. But the answer was incomplete. Distribution of profits to the shareholder in cash is a dividend. So now, to avoid tax on this, the profits can be distributed in the form of kind also, so that nobody will come to know that we have given what. So instead of shareholder to cash bank, shareholder to asset. Can the asset be given to the shareholder? So now what is distributed? Profit is distributed, but profit is distributed in the form of asset. So 222A. Which section? 222A. Which says that any company has distributed what? Distributed cash or bank? No. Asset. Asset to its shareholders. Then whatever will be the book value of this asset or fair market value of this asset as on date of distribution. So the asset which was of the company, the asset which was appearing in the balance sheet of the company, asset has some balance sheet value. So asset is recorded at a certain value in the balance sheet, yes or no? So imagine the balance sheet of the company, this side liability side, this side asset side. In the asset side, cash bank is there. Cash bank is not credited. Cash bank is not given, some asset is given. Shareholder to cash bank? No, shareholder to asset. Last entry was that. So the asset is given. So from the balance sheet, this asset is given. Asset, the value of that asset in the balance sheet was 5 lakhs. Value of that asset in the balance sheet was how much? 5 lakhs. But as on the date of distribution, as on the date on which the asset was given to the shareholder, as on that day, the fair market value of that asset was 7 lakhs. So how much distribution happened? 5 lakh distribution happened or 7 lakh? How much benefit was given to the shareholder? 5 lakh benefit was given or 7 lakh? Always 7 lakh. Because bloody book value can be manipulated, no? In your balance sheet, you can show your asset at 1 rupee also. Your balance sheet can lie. Your balance sheet can manipulate, but the market will not be lying. So what was the value of this asset as on the date of distribution? 7 lakhs. So we will say that you have given the benefit. You have given how much to the shareholder? 5 lakh. Balance sheet value? No. Fair market value. As on the date of distribution. So the date on which the asset was distributed. On that day, whatever was the fair market value. I'm deleting this, huh? I'm deleting this. So fair market value of the asset as on the date of distribution. This fair market value will be deemed to be your dividend. But wait. As on the date of distribution, what did I say? As on the date of distribution, the fair market value was how much? 7 lakhs. So as per 222A, the fair market value of the asset distributed, this fair market value will be treated as a deemed dividend. But as on the date of distribution, the reserves available was only 6 lakhs. How much reserves was available? Maximum dividend, if would have been paid in cash, would have been how much? 6 lakhs. Because the reserves available was 6 lakhs. So if the profits are distributed in the form of asset, how can you say that 7 lakh is a deemed dividend if profit available itself was 6 lakh? So distribution of the asset, distribution to the shareholder in the form of asset, the fair market value of the asset will be treated as a deemed dividend, but it will be only to the extent of accumulated profits. Accumulated means reserves. So as on the date of distribution, of this asset, if the reserves were 20 lakhs, so out of 20 lakhs, 7 lakh is given as deemed dividend. 7 lakh is given as dividend. So that entire 7 lakh would have been considered as deemed dividend. Getting my point? Because enough reserves are available to distribute this 7 lakh as a dividend. But if as on the date of distribution, the accumulated profits, the reserves were itself what? 6 lakh. Then how can you treat bloody 7 lakh as a deemed dividend? So treat only 6 lakh. So the fair market value will be treated as a deemed dividend, but it will be only to the extent of accumulated profits of the company. So what are the accumulated profits of the company as on the date of distribution? You will have to check that. This 7 lakh will be, the fair market value will be treated as deemed dividend in the hands of shareholder only to the extent of that accumulated profits as on the date of distribution. Understanding? So this fair market value will be treated as what? The fair market value of the asset as on the date of distribution shall be treated as deemed dividend under section 222A, but only to the extent of what? Accumulated profits. Accumulated profits means reserves. Yes or no? As on accumulated profits. As on date of distribution of that asset. Will you remember this? Hello? Are you a shareholder? Company is giving you cash. Profits are given to you in the form of cash. Then that profit which is given to you in the form of cash will be your final dividend, will be your interim dividend. But if you are a shareholder and company is distributing profits to you in the form of asset, meaning whenever the company will give you any asset, no, it will be assumed as if it is given out of profits as on the date of that distribution. So whatever will be the fair market value of that asset as on the date of distribution will be deemed to be your dividend, but only to the extent of accumulated profits as on the date of that distribution. Will you remember this? Hello, sir. Sure. Balance sheet asset side, if you give cash or bank, will it be dividend? Cash is reduced. Profits are reduced and distributed in the form of cash. Cash is reduced. It is a dividend. What if asset is reduced? Then also it is a dividend. So will you touch the asset side? Nobody should come to know that I have given the dividend. Hello? Everyone will say that I have given dividend if I reduce cash and distribute. If I reduce asset and give that asset to the shareholder. So asset reduction will lead to dividend. Cash reduction, asset reduction will lead to dividend. Now nobody should know that I have given dividend. So definitely I will not reduce cash, I will not reduce asset. But can I increase my liability? 222B. I am distributing debentures. I am distributing debenture stock, deposit certificates to my shareholders. Shareholders, take debentures. Shareholders, debenture stock, deposit certificate. I am distributing debenture stock, deposit certificate to my. Bloody, this is a loan instrument. You take a loan from someone, you take money from someone, and against that you distribute, against that you issue debentures, no? Why are you giving debentures to your shareholders? Oh, cash decreased, then it will be dividend. Asset decreased, then also it will be dividend. Oh, so you are giving dividend by increasing your liability. Right now you are issuing debentures worth 1 lakh rupees. Are you getting 1 lakh? No, you are just giving 1 lakh rupees worth of debenture. Later on, after some time, you will mature those debenture and give that 1 lakh to the shareholder. What everyone will say? I got redemption value of my debenture. Redemption value of the debenture is nothing but the dividend which you are giving in the form of redemption value. Trying to fool us. We'll catch you in 222B now. Which section? 222B. Now, any company is there? Yes or no? See, this is copy paste only, yeah? Copy paste only. Duplicate. So now, I am talking about 222B, clause B, which says that any company is distributing. What the company is distributing? Company is distributing distribution of debenture, debenture stock, deposit certificates, meaning company is increasing the liability. And that debenture stock or deposit certificates are issued to shareholder. So whatever will be the fair market value of these debenture stock or deposit certificates as on the date of distribution will also be deemed as a dividend under section 222B. But it will be deemed dividend only to the extent of accumulated profits, because beyond that the dividend cannot be given neither in cash, nor in the form of asset, nor in the form of increasing the liability. Beyond your reserves, no amount can be treated as dividend. Understanding? So as on the date of distribution of this debenture, as on the date of distribution of debenture stock or deposit certificate, what was the accumulated profits? To that extent only, the distribution will be treated as deemed dividend, not beyond that. Understanding? Yes or no? Now tell me, if any company is there, okay, no? Any company is there, that company is giving what? Bonus shares. Company is giving bonus shares, will be given to shareholders, no? Shareholders can be equity also, shareholders can be preference also. Now if the bonus shares are given to PSH, please be very careful. I have written, did I write ESH? Equity shareholder? No. Any bonus shares given to equity shareholders will not be treated as deemed dividend. But whenever the bonus shares are given to preference shareholders, now you'll have to check the fair market value of such bonus shares as on date of distribution. So this fair market value of the bonus shares will also be treated as deemed dividend for the shareholder. But it will be treated as deemed dividend only to the same thing I have to write now. So it will be a deemed dividend under section 222B only. So 222B has two parts. 222B has two parts. What have I written here? Have I written preference shareholders or I have written shareholders? This shareholder can be any type of shareholder. Equity, preference, we don't care. If you give debenture stock or deposit certificates to any of your shareholder, the fair market value of those debenture stock or deposit certificate will be treated as deemed dividend in the hands of that shareholder, but only to the extent of accumulated profits as on the date of that distribution. But if you give any bonus shares to the preference shareholders, then the bonus shares distributed, the fair market value of those bonus shares as on the date of distribution will also be treated as deemed dividend in the hands of those preference shareholders. But it will be deemed dividend only to the extent of accumulated profits as on the date of that distribution. Now important notice, distribution of what? Bonus shares to equity shareholders is a deemed dividend or not a deemed dividend? Not a deemed dividend. Yes or no? Please don't consider this distribution of bonus shares to equity shares as a deemed dividend. This is not your deemed dividend. Understanding? This is not your. So what is your deemed dividend? If the bonus shares are given to preference shareholder. But there has to be some logic for this, no? Why only to preference shareholders? Why not to equity? Do you know equity are ordinary? Why they are ordinary? Because they are equity. They are not preference. Hence they are ordinary. That poor fellow, those poor people, equity shareholders, they don't have any preference. When the company is winding up, no, they will be paid last. Capital amount last. If everyone is paid, lenders are paid interest, okay, then the people from whom the company has taken loan. So from the profits also, they don't have any preference. Last, whatever profit remained from that profit, if the company wants, company will give them dividend. If the company does not want, company will not give them dividend. They don't have preference for receiving dividend. they don't have preference for receiving capital, they don't have any preference only. Hence they are ordinary. Hence they are. Just imagine if you all are equity shareholders, if you are, and the income tax department is watching you from above. Oh, equity shareholders may or may not get dividend. If they will get dividend, we'll get the income tax. Company might not give them dividend. So if the company does not give them dividend, we might not get tax because they are not going to get dividend. Sometimes it might also happen that they are not getting dividend. So if they are not getting dividend, will not get tax also. Oh, if they will get dividend, then we'll get tax also. So the government also knows that you might get dividend, you might not get dividend. There is no confirmed thing that you are going to get dividend. So government does not expect only that you are going to get dividend. There is no expectation only by the government, by the income tax department that you are going to get what? Dividend. Understanding? But what about the preference shareholder? You know, looking at the preference shareholders, the government, the income tax department is so excited. Why? Because their name is preference shareholders, meaning they want dividend in preference. Come what may, whatever may be the profits, whatever may be the situation of the company, we don't care, we want dividend. That is their attitude. That is why they are preference shareholders. So for example, if you all are preference shareholders, income tax department is watching you. Now income tax department is certain that whatever happens, are you all going to get dividend? Are you all going to get dividend? Is it confirmed that you are going to get dividend? So confirm you are going to pay us tax. So it is confirmed that your income is going to happen, and confirm on that income you are going to pay us. Confirmation is gone. Because bloody against dividend the company has issued. You are about to get dividend income. On that dividend income you are about to pay us tax. Will we get tax on that now? You disappointed us by taking this bonus. See how many dreams we saw, you know. Government is saying, how many dreams we saw? That you are going to confirm you are going to get what? Dividend. On that dividend income, confirm you are going to pay tax. With this tax, government will do this much spending, this much spending. Because of you taking the bonus in lieu of your dividend, we are not bloody getting our tax, which confirm we were supposed to get. Yes or no? Hence, bonus share if you receive, no, in lieu of your dividend. Because bonus is given in lieu of dividend only, no? Instead of giving you dividend, the company will give you bonus. But you are not supposed to take bonus. You are supposed to take dividend. It was your preference. And if your preference was to get dividend, we were confirmed that you are going to take the dividend, and on that dividend income you are going to pay us tax. Because of you taking this bonus shares, are we getting tax? So we are not going to leave that tax. We'll consider your bonus also as your dividend only. But for equity, no. We were not expecting only that whether they are going to get dividend or not. And in lieu of that probable dividend, if they are going to get bonus, so that bonus we are not going to consider as their deemed dividend. Let them receive that bonus. Their bonus we are not going to consider as deemed dividend. Because their bonus is coming against a dividend income which was probable. Might come, might not come. Logic. If you remember, okay. Don't remember, no problem. Preference shareholders getting bonus shares, deemed dividend. Equity shareholders getting bonus, not a deemed dividend. Will you remember this? Okay? Okay. So, what are you going to see? Fair market value of the bonus shares distributed to the preference shareholders as on the date of distribution. This fair market value will be deemed as dividend under section 222B to the extent of accumulated profits as on the date of distribution. Now, any shareholder receiving what? Debenture stock, deposit certificate. Any shareholder receiving debenture stock, deposit certificate. The fair market value of these debenture stock or deposit certificate as on the date of distribution will also be deemed as dividend under 222B, but only to the extent of accumulated profits as on the date of distribution. Did you understand clause A and clause B? So if you see any of these distributions happening during the previous year, what will you call? Deemed dividend, and classify that as your income from other sources. Understanding? Will you be able to identify or no? 222 A and B done. Now see, if I reduce my cash, if I reduce my asset, it is a deemed dividend. If I increase my liability, or even if I issue bonus shares to the preference shareholders, by increasing the liability also I cannot give dividend. So what I'll do now, you know, I will start the company, run the company for 5 years, 7 years, 10 years, keep on earning profits. Shareholders, we all are shareholders, huh? We all are shareholders. What we'll do? We'll start a company. Owners, we all are owners. We'll start the company. Okay. We'll do the business. The company will do the business. Company will earn profits. First year profit, not taken as dividend. Because if we take it as a dividend, it will be taxable as income, no? Second year income, not taken as dividend. Every year's profit getting accumulated as reserves. Yes or no? First year profit accumulated as a reserve. Second year profit accumulated as a reserve. Third year profit accumulated as a reserve. Likewise, 5 to 7 years the company did the business, and 5 to 7 years the profits were earned, and all those profits of 5 to 7 years are now appearing in the reserves. So now this reserves is a total profit balance of these many years, never taken as dividend. Now this company will be closed, liquidation. And on liquidation, this profit will be taken. And what the shareholder will say? No, we are not getting dividend. We are getting our amount back on liquidation. One tight slap. As on the date of liquidation, profits were there, no? And if these profits were distributed while the company was a going concern, this was supposed to be considered as your dividend, no? So now these profits which are there as on the date of liquidation, if they are distributed on liquidation in the form of cash or asset, will also be treated as deemed dividend, even if they are distributed at the time of liquidation. We are not going to leave. Why? Because if these profits would have been distributed while the company was a going concern, we would have treated that distribution as a dividend. Then why not now? If we will not consider this as a profit now, what you are going to do? You are going to start a company, earn profits for many years, and then those profits you will take as a liquidation profit, liquidation proceeds, saying that, see, we are getting our money back from the company. But bloody, you are not getting your money back from the capital. You are not getting only the capital back, you are getting the profits also, which were there as on the date of liquidation. Now again you will start a new company, again you will start earning the profits of that company, yes or no? And those profits again you will liquidate that company, and those profits you will take as liquidation proceeds. Simple thing, if those profits you would have received while the company was a going concern, we would have considered that as your dividend income. Then why not now? On liquidation also, if the profits are distributed in the form of cash and assets, even that will be treated as deemed dividend. Anything over and above that will be taxable as your capital gain under section 46(2) as the full value of consideration for transferring your shares in the liquidating company, if you remember. So the distribution of profits at the time of liquidation, any distribution in cash, any distribution in the form of assets, only to the extent of accumulated profits as on the date of liquidation will be treated as redeemed dividend. But anything over and above that will be taxable as your full value of consideration under section 46 to under the head capital gain for transfer of your shares. But to the extent of accumulated profits, we will consider that amount as a deemed dividend. Understanding? So, if I talk about 222C, if I talk about 222C, okay, now 222C says that company is in liquidation, and that company which is in liquidation to its shareholders, what the company is distributing? Distribution of cash or distribution of assets on liquidation. On liquidation. So the value of cash and the fair market value of the asset. Fair market value of the asset as on date of. Fill in the blanks. Always on the date of distribution. I have told you that time also. So the asset is given, the date on which the asset is given, you are supposed to take the fair market value as on that date only. Date of distribution. Yes or no? So fair market value of the asset as on date of distribution plus the cash value. This total amount is the distribution on what? Liquidation. Now this distribution is also treated as your deemed dividend. Is also treated as your deemed dividend. But this will be treated as your deemed dividend under section 222C. 222C. To the extent of accumulated profits as on the date of. After the liquidation date, the company does not exist only. So distribution will happen after the liquidation date. So the profits has to be checked as on the date of liquidation. That is the last day on which the company exists. After that the distribution is happening. This is the catch here. Fair market value you will check as on the date of distribution. But the accumulated profits you will check on the date of liquidation. Everywhere accumulated profits as on the date of distribution. But in this section 222C, the accumulated profits as on the date of liquidation, guys. Liquidation. Fair market value as on the date of liquidation. No, it will be on distribution. Everywhere. Distribution, 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 distribution. Here, distribution, liquidation. Understood? Accumulated profits as on the date of liquidation. To that extent, whatever distribution is happening, that distribution will also be deemed as your deemed dividend. The value of cash, fair market value of the asset, total amount will be treated as your deemed dividend, but it will be treated as your deemed dividend only to the extent of your profits as on the date of liquidation. Any excess, what did I say? Any excess distribution over and above what? Accumulated profits as on date of liquidation. That excess will not be deemed dividend, but guys, that excess will be your deemed full value of consideration under section 46(2) to compute what? Compute capital gain on transfer. On transfer of what? Shares in liquidating company by the shareholder. So in the hand of shareholder, the capital gain will be calculated for transferring the shares of the liquidating company, because he is going to surrender those shares. Yes or no? Extinguishment of right is there, and for that extinguishment of right, in the capital asset, meaning shares, he is going to get this consideration. This will be full value of consideration based on which the capital gain will be calculated for the for shares. And what will the period of holding of those shares? The date on which the shares are acquired, from that date till the date of liquidation will be the period of holding of those shares. I've discussed this entire point in capital gains. Now I'm not going to discuss it. Will you remember this? Hello, sir. So 46.2. 46.2. Cash coming, fair market value of the asset. Total 5 lakh, 15 lakh, total 20 lakhs. Yes or no? Out of that, some amount was already considered as deemed dividend. Reduce that. How much amount was treated as deemed dividend? To the extent of accumulated profits as on the date of liquidation. Remove that amount and the balance amount will be treated as your full value of consideration for transferring your shares. Based on that, you calculate the capital gain of your shares as per 46.2. Done, sir? Done, sir? Now, cash decreasing, it will be dividend. Asset decreasing, dividend. Liability, dividend. Bonus, dividend. Close the company, dividend. Apply some mind. Distribution of profit is happening, that is the problem. No. Distribution out of profit is happening, that is the problem. So whether I distribute asset, whether I distribute liability, whether I distribute profits on liquidation, distribution of profit is happening, that is the problem. Now what I will do? I will not distribute the profit. First I will convert my profit into capital and then I will distribute the capital. Distribution of capital is not treated as dividend. Don't worry, it will be deemed dividend. Can you distribute your capital? Yes. First what you will do, you know. Imagine your balance sheet. In this balance sheet, 1 lakh shares. What did I say? Of rupees 10 each. So what was your share capital? What was your share capital? Come on, tell me. Of rupees 10 each, meaning the share capital was 10 lakh rupees. Yes or no? So your share capital was 10 lakh. Guys, please be very careful here. See, what I am trying to explain, if you will understand this thing, then it is okay. Otherwise, you will have to remember the magic. This is a logic which I am giving for 222D. Now tell me, will this company have reserves also? Reserves, P&L balance, reserve balance, yes or no? So reserves and surplus, this company is having reserves and surplus of 10 lakh rupees. How much? Now see, if these reserves are decreased and the decrease in the reserve and the distribution is happening, then that is confirm what? Dividend. So what I will do, you know, I will capitalize the reserves. So how do you capitalize your reserves? Out of these reserves, first I will issue bonus shares. Because bonus can be issued through reserves. So how much reserves I have? I will issue 10 lakh shares, 1 lakh shares of rupees 10 each as bonus shares out of my reserves. So now the reserves will become nil and my share capital will become 20 lakhs. Each share of rupees 10 and how many shares? Understood what happened? Now in these 2 lakhs, 1 lakh shares are bonus shares. Have you made the balance sheet like this somewhere? If you make a balance sheet, in that balance sheet, the share capital is there. How much is the share capital? 2 lakh. 2 lakh shares of rupees 10 each. 20 lakh is the share capital. 20 lakh bloody that share capital is there. In that 20 lakh, 10 lakh is the reserves which you have capitalized, no? Hello? Now what are you going to do? First entry you will pass reserves account debit to share capital. Reserves debit to. So you have converted your reserves into capital now. This is known as capitalization of reserves. This is known as Capitalization of reserves. Now how many shares you are having? How many shares you are having? Now what you will do, you will bring the shares from 10 rupees each to 5 rupees each. Are you reducing the face value from 10 to, so from 10 to 5 it will become, shares will remain same, but the share capital will now have to become 10 lakhs, understanding or not? Now what entry you are going to pass? You will debit the share capital. First, debit the reserves, credit the share capital, meaning entire reserves you have capitalized. Now from that capital, the 10 lakh reserve was there, no? That 10 lakh reserve I have to pay in the form of dividend. But I cannot directly pay from reserves to assets, reserves to cash bank. What I am doing? First I am converting that reserve into capital. Now where is that reserve? In the capital. How much? 10 lakh. So I will reduce my capital by, I have to reduce my capital by 10 lakh. So what I will do? I will reduce my face value of the shares by 5 rupees. So reducing the capital, I will have to debit share capital by how much? 5 lakhs? Sorry, by 10 lakhs. Debiting share capital by 10 lakhs to cash, to assets, to the shareholder. Debiting the capital to shareholders and shareholders to cash bank. Net entry, capital debit to cash bank. Did I distribute cash? Yes. Did I distribute asset? Yes. I have not distributed out of profits. But bloody this distribution is happening out of capital. From capital you are paying cash. From capital you are paying assets. This will also be a deemed dividend because we know what exactly you have done. You have converted your profits into capital, and this converted profit out of capital you are giving in the form of cash and assets, so that we never come to know that it was a dividend because you did not debit P&L to shareholders, then shareholders to cash bank. Yes or no? So you are trying to fool us. So we'll catch you in 222D. Which section? 222D, which says, you understood no logic? Hello. So now what is happening? Now in 222D, which section? 222D, they are saying that any company distributing what? Distribution of cash and assets. Assets, you have to check fair market value as on date of distribution. Now this distribution is happening to the shareholder. Now this distribution of cash and asset is out of what? Out of capital. Meaning capital debited to shareholder and shareholder to cash, shareholder to asset. Then this distribution is also treated as deemed dividend to the extent of accumulated profits. Do you remember? Accumulated profits were 0. So even if it will be treated as deemed dividend, how much will be treated as deemed dividend? 0. Because the reserves were how much? Yes or no? Hence they have said accumulated profits whether capitalized or not. Sir. Do you remember that balance sheet? In that balance sheet, reserves and surplus was how much? I have converted this reserves into what? So how much was the capitalized profits in my share capital? So you have to take the amount of cash as well as assets as deemed dividend to the extent of accumulated profits, whether the profits are capitalized or not. Capitalized profits were how much? 10 lakhs. and not capitalized, nil. 10 lakh plus nil. Total accumulated profits 10 lakhs. It will not be nil. So you have to take the capitalized profits everywhere. In section 222 A also, 222 B also, 222 C also, and 222 D also. Everywhere you are supposed to take accumulated profits, whether held as reserves and surplus or whether capitalized. Capitalized means converted into bonus. So the profits which are converted into bonus are also treated as a part of your accumulated profits, also treated as a part of your reserves, whether capitalized or not. Not is 0 and capitalized is 10 lakh. So what is the total accumulated profit? 0. No, it is 10 lakh. To the extent of 10 lakh, it will be treated as your deemed dividend. Understanding or not understanding? Sure. So tell me, here what I will write. Out of capital, this distribution will be deemed dividend. Deemed dividend. Under which section? 222D. But only to the extent of what? Accumulated profits. As on date of distribution, accumulated profits, whether capitalized or not. Even you are supposed to take the bonus amount figure from the share capital, because that bonus is nothing but your capitalized profits. Understanding? Here also and in earlier sections also. Getting my point? Everywhere you are supposed to see which profits? Profits which are appearing in reserves also, and profits which are capitalized as your bonus shares also. But both these profits, accumulated profits, whether capitalized or not, as on the date of distribution, as on the date of distribution, as on the date of distribution. But in the case of 222C, as on the date of liquidation. Will you remember this? But remember one more thing. Distribution out of capital, distribution of cash and assets on reduction of what? Capital. Distribution of cash and assets on reduction of capital, that is known as what? Deemed dividend. So now they are saying that distribution of cash and assets on what? Reduction of capital at the time of buyback is not equal to deemed dividend under section 222D. Why they were saying like this, you know? Because this was already considered as full value of consideration under the head capital gain. So that distribution is happening as a buyback price. Company will buy back the shares, the company will give you cash, company will give you assets, yes or no? And that was already considered as your full value of consideration under the capital gain head. Then how can we consider that amount also as your deemed dividend? So we will not consider this as a deemed dividend, because we used to consider this earlier as full value of consideration under capital gain. So if this amount is already getting taxed in your hands under the head capital gains as your full value of consideration, then why to consider this amount as your deemed dividend? Understanding? So they said that this distribution on buyback, distribution on reduction of capital will reduce on the buyback also, no? Hello? The company's capital will reduce on buyback also. And on buyback, if the capital is getting reduced, the payments are made, assets are given, cash is given to the shareholder. For shareholder, it is already getting taxed under the head capital gain. Or the company is already paying tax on that under 115 QA. Getting my point? So if that amount is already getting taxed once, then why to tax that amount again as deemed dividend? Hence it was not treated as what? On this reduction, whatever amount is coming is not treated as deemed dividend under 222D. 222D. But now the same amount is now considered as deemed dividend under 222F. The same amount which is not considered as deemed dividend under 222D. The logic what they gave? The logic they gave that since this amount, company is already paying tax under 115QA. And if the company is not paying, it is already taxed in the hands of shareholder under the head capital gain as full value of consideration. Then why to charge it? But wait, on this reduction, this will not be treated as deemed dividend under 222D. But if a domestic company doing a buyback, so on that buyback also, the capital will reduce. And the company will give what? Cash, assets in the form of buyback price. To whom? Shareholder. That buyback price is no more taxable in the hands of company. 115QA gone. And it will not be taxable in the hands of shareholder under the head capital gain as full value of consideration. 46A is applicable, but there you are supposed to take nil. But now that amount will be treated as your deemed dividend under a separate section, 222F. Only if, what did I say? Only if the buyback is made by a domestic company from the shareholder. Getting my point? What if any other company is there? Can any other company can be there other than domestic company? Hello? Other than domestic company, can that company do the buyback? Yes. That company will do the buyback. The capital will reduce. And on that capital reduction, if that company is giving what? If that company is giving buyback price in the form of asset, in the form of cash, will it be treated as deemed dividend under 222F? No. 222F is applicable only in the case of buyback done by domestic company, not any other company. So will it be treated as deemed dividend under 222F? No. So it should be treated as deemed dividend under 222D? No. Because 222D specifically says that it will not be treated as a deemed dividend. Why? Because that entire buyback price, on that the shareholder will pay tax under the head capital gains. Understanding? I'm trying my level best to connect the dots. If it is getting connected, then it is okay. Otherwise, remember this much only. Okay. So now tell me, however, what did I say? However, distribution of cash and assets on reduction of capital at the time of what? Buyback of what? Shares by any domestic company, is equal to what? Deemed dividend under section 222F with effect from 1/10/2024. So first of all, tell me, company doing a buyback, capital will reduce or will not reduce? Capital will reduce. So on that capital reduction, company will do a buyback, capital will reduce. On that capital reduction, will the company give cash, assets, buyback price? Buyback price will be given in the form of cash and in the form of asset. So give your shares back, company is giving you buyback price. That buyback price can be given in cash also, in kind also. So whatever buyback price is given, meaning cash given, asset given, on buyback, meaning capital is reducing. And sir, you are saying that whatever distribution happening on capital reduction will be treated as what? But that should not happen at the time of buyback. Otherwise buyback, then it is a deemed dividend, yes or no? But if it is happening at the time of buyback, then it will not be treated as a deemed dividend. Why? Because this is already getting taxed under the head capital gain in the hands of shareholder. That entire buyback price will be treated as full value of consideration under the head capital gain. I'm not talking about domestic company. I'm talking about all other companies other than domestic company. Other than domestic company. Yes or no? For them, distribution made on buyback will not be treated as their deemed dividend under 222D, because that entire amount gets taxed in their hands under the head capital gain as their full value of consideration to calculate capital gain under 46A. Understood? So that amount will not be treated as what? Deemed dividend under 222D. Under 222D. Once it is taxable under the head capital gain. Now tell me, if the domestic company is doing the buyback, so capital will reduce, payments will be made to the shareholder. So that payment of cash, assets happening to the shareholder as what? Buyback price. Even that is not a deemed dividend under 222D. And that was supposed to be taxed under capital gain as full value of consideration. But they are saying no, we are not going to charge there, we'll charge it under the head IFOS as a deemed dividend under a separate clause 222F. Hence under the head capital gains they are considering full value of consideration as nil. Cost of acquisition is allowed as a deduction there, and that cost of acquisition cannot be claimed from here. Yes or no? So with effect from 1st October 24, it will be treated as deemed dividend under section 222F and no deduction for what? For cost of acquisition of shares from such deemed dividend, because that cost of acquisition is allowed under the head capital gain under section 46A, where you are going to take full value of consideration as nil, and because of that cost of acquisition getting allowed there, you will always have a loss there. That loss and this income, net amount will be that much only, which would have been taxed in the form of capital gain. Understood? Sure. One small clause is remaining, 222E, which we are going to do tomorrow, and tomorrow we'll wind up this chapter. Okay, no? See, out of those incomes which I have written, no? These incomes. Can you see these incomes? Huh? Out of these incomes, we have just covered. This is the depth in which you are supposed to do all these things. Getting my point? But all the other incomes now, small incomes, small discussion will end soon. So tomorrow we are going to finish this chapter. Okay? See you tomorrow. Bye bye. Bye bye. Bye bye.